Hi everyone, the following is a recording of a Zoom meeting that took place on the 5th of May 2021, at which we discussed changes to IR35 and the impact of those changes on veterinary locums and practices with Simon Biles, a chartered accountant and tax advisor from Scarrott.
As Arlo said, my name's Simon Biles. I'm a chartered accountant, chartered tax advisor, working for Scarrott. We are a firm of accountants that specialise in the veterinary profession, act for practices and locums all across the UK. So we've got a good depth of experience in terms of how all of these changes that are coming through at the moment are impacting both practices and also locums from both the tax perspective and also what the practical implications are for them. To start with, it's important to say none of what we're going through tonight, and it is a bit of just a disclaimer to say that it's not personal sort of financial advice. There's a huge amount of complexity around some of these cases and determination of the exact position for individuals that you need to go away and then look at it for your individual circumstances. It's to try and give a broad picture as to where we are, what the position is and what's changed and what the general impact is. So hopefully you have a better idea as to how you could take things forward afterwards. To start with, I think it's worthwhile going back to the start in terms of what is IR35. So IR35 has been around for over 20 years now, and it's just recently been updated. Now, that update was due to come in from April 2020. Global events sort of took over somewhat and it got pushed back until April 2021, but it is now up and running, and that's what's kick-started a lot of the changes that people are probably seeing in the profession. In essence, it is a tax legislation that HMRC brought in to combat tax avoidance as a result of employees providing their services through an intermediary. Now, that intermediary could be a partnership, but most commonly it was a limited company. And that was primarily for tax purposes. So when prior to this coming in, there was lots of cases where employees were there working for their big company on a Friday. They all got made redundant, turned back up on Monday, doing exactly the same job, but invoicing them through their own limited company in order to reduce their own tax bill and have more cash in their hands, and also to mean that the company that was employing them wasn't paying any employment taxes or providing the extra benefits alongside that. So the IR35 legislation was brought in to try and counteract that side of things. What it means is if you're caught under the IR35 legislation, then your intermediary, you as the worker, have to account for the tax and national insurance as if you were an employee. That generally results in a significant reduction in the after-tax income that can be received as a result of that. So that's kind of where it is. The legislation and how it's been enacted hasn't necessarily been hugely successful, and that's why HMRC have now looked to make some changes in order to make it more successful in their eyes, which is they want to collect more tax. How it works is the legislation, and it hasn't really changed with the recent updates, it's just in terms of the general principles, is that it seeks to turn your legitimate one-person business into an employee of whoever you're providing those services to, and tax you as if you're an employee rather than actually in business on your own account. That is underpinned by a huge amount of employment law and case law, both on IR35 cases specifically and just also trading cases generally. And as accountants, we can be very boring, and we would have whole day courses just on those aspects in terms of what would be classed as an employee, whether they're under IR35 and so on. So I can't go through all of those side of things this evening because I would probably bore you all to death going through all of that. There are some main considerations, though, that when it's being considered need to be taken into account, just as to whether you are an employee, whether you can legitimately call yourself your own business and operating on your own account. One of the key things is control. So do you have control over what you do, how you do, when you do it, and where? So can you decide if you want to take a job, when you do it, how you actually undertake that job? So do you have the clinical decision-making process? Do you decide what you do? Do you turn up and say, actually, now I want to do consult surgery? No, you've got someone telling you actually how they want you to do the work in that period of time. Another key thing is any sort of obligation as a result of the relationship that's built up between the worker and the business that's contracting with them. So if they've got an obligation to provide you with work, and you're obliged to then accept that work, then that is more of an employee. If they've got there's an offer of work, but you can turn that down because you've got something better to do, you want to spend some time with the family, go out and play a round of golf, whatever it is you want to do, if you can turn that down on your own account, then that's something that's more akin to actually operating as your own business rather than an employee. Because if you were an employee and you did that, you probably end up with a disciplinary and get fired, or start that process. So there's that obligation in terms of how the work can be done. If you're operating as in your own account, so rather than as an employee, then there should be some financial risk associated with that as well. So if you make an error, you've got to bear the cost of actually correcting that and putting it right. Whereas if you're an employee, that wouldn't necessarily be the case. There can be other things as well. So provision of equipment, if you have to provide your own equipment or you need that in order to undertake the work, do you provide that rather than the company that's engaging you? Or potentially substitution is a key one that has always come up in IR35 contracts, if you've ever seen one, is that they want to say, are you able to send a similarly qualified individual to actually undertake the work rather than it being specific for your services? The idea behind that is if you can send anyone to do a job, then it's contracting as a business rather than saying, actually, no, we want Joe Bloggs to actually come and do that work. You're then more likely to be an employee. The difficulty with that is there's sort of lots of contract that will say, yes, we're IR35 compliant or would have been in the past, just because they've got a substitution clause in there. It's very hard to prove because it very rarely happens in practice to actually send someone different to undertake the work. So those are some of the key things. There's lots of other variables in it, and it's not a sort of a tick box exercise to say, yes, I've done X, Y, and Z. It's looking at the whole engagement in the whole, and then actually how does that look in terms of the overall employment position. HMRC do provide their check employment status for tax tool, the CEST tool. So you can go through and put in your details in there, and that will hopefully give you an answer. It doesn't in all cases. Some cases it just says we can't provide an answer, we need more information, or you need to go and seek specialist advice. But it's only as good as the data that is input into that tool to start with. If you answer the questions incorrectly, then it might give you the incorrect answer. And whilst they stand by the decision that's there, it's only on the basis of you've given it the right information to start with. So you need to make sure that you're actually answering those questions in the right way, and also that it's a true reflection of what's happening in real life. So you'd want to have a written contract in place for any of these engagements, ideally to document exactly what's been agreed with people. But there's no point having a contract that is then compliant and ticks all the boxes, so that means you're outside of IR35, only for the actual reality of the work that you're doing and how that's dealt with to be something completely different, because HMRC have the ability to look at that and say, actually, no, the contract is not representative as to what's actually happening on a day-to-day basis. We're going to say this is what the deemed contract is, because that is exactly what's happening. And then we're going to tax you on that basis. So it's only as good as actually what data you put in there, and actually it needs to happen in real life as well. That being said, locums in the veterinary profession working in a true locum capacity, so they're doing sort of short 1 or 2 week stints, holiday cover, whatever it, or sickness cover, those sort of things, and moving around various different practices throughout the year, shouldn't have IR35 applied to them in most cases. That it is a generalization. but it's there as a risk that's in the background. So up until now, with all of that in terms of the potential risk that's available, if as a locum they were invoicing in their own name, so just Joe Bloggs went along to practice, did the work and then invoiced as Joe Bloggs, the practice has the risk of whether that person is an employee or not. So if HMRC came and looked at the practice accounts and said, actually, yes, we think Joe Bloggs should have been an employee, then it's the practice's responsibility to have paid the tax and national insurance that should have been deducted from any amounts that are paid to them. So the risk is with the practice of getting anything wrong in that instance. Historically, up until the most recent changes, most practices wanted locums to invoice through an intermediary, like their own limited company. And the reason for that was it moves the risk from the practice to the individual that's actually undertaking the work, the locum, and the company that they're operating through. So it takes that potential tax risk and saying, actually, no, the way the IR35 rules were working previously, if that work is looked at and HMRC reviewed the position and said, actually, you are an employee, it is that that company and the locum and that needs to then account for the tax and national insurance that should have been deducted on that, and the practice has no extra responsibility. So they can say, yeah, we're employing the locum through the company, that manages our risk profile, so we're quite happy that we don't really need to check how things apply, because we know that we don't have any exposure to an additional tax cost coming out of that, in broad principles. However, what that means for HMRC is you have thousands and thousands of these small individual companies for locums, but also just contractors more generally. And they need to check each of those companies if they think that there's something amiss with IR35. And that's where it's not workable for HMRC. They haven't been able to check all of those thousands of companies, and they think they're missing out on some tax and national insurance just as a result of this huge volume that are there. So the most recent changes that have come in has been the introduction of off-payroll tax, which is an add-on to the IR35 rules. The basis that we've just gone through stay the same. It doesn't change how things are checked and what the tax position is, but it does move the risk burden. So these were first introduced in 2017, but only for the public sector initially. So it had quite a big impact on NHS contractors and people providing services to the NHS through limited companies. It's now been decided that actually that's going to extend to the private sector, because that was seen as a success for HMRC in enhancing the tax collection from those employees that are working there. So it's been extended to the private sector, but it only applies to medium and large size businesses and that's determined by company accounting rules, which largely means you need to have 2 of 3 of either turnover of more than £10 million, net assets over 5 million, or more than 50 employees. If you've got 2 out of 3 of those, you would be a medium sized company at least, and then large is even bigger. If you're under those thresholds, any changes that are being introduced now as a business don't apply to you. That largely means that if we're looking at the veterinary profession, other than some of the larger independent groups that are around, these changes mostly apply to the corporate groups and how they're operating. It doesn't apply to the vast majority of independent practices, other than those larger ones that would have more than 10 million a turnover, more than 50 employees, etc. The changes that have been introduced, they move the risk from the individual. So previously, if they were invoicing through a limited company, it was the tax risk was on that individual and their company, if there was anything that was caught by the IR35 rules. The changes that have been put in place is for those medium and large size companies, then it moves the risk from the individual to them. So they're now then looking at that thinking, okay, we need to make sure that we are not caught by this IR35 rules, because if they are, it is then their responsibility to pay over to HMRC the tax and national insurance that should have been deducted based on the amount that was paid to them. So if you were invoicing, say, £300 for a day, a basic rate taxpayer, there would be national insurance on that as well. Effectively, that needs to be grossed up for the tax and national insurance that the practice should have deducted in order to leave you for £300 in your pocket. By the time they've done that, and then they also have to pay employers' national insurance on that grossed up cost, to get to £300 a day in your pocket would cost them around £500 a day. So it's about a 70% uplift. So that's quite a significant risk for the practices that are then taking them on, where this would be a concern for them. So the larger corporate groups primarily. They can manage that by going through the individual checks for each locum, but that needs to be done on each engagement as well as each individual. So if you think about how many locum appointments they would make over the course of the year, that would probably be many hundreds or potentially thousands of checks each year, because it has to be for each engagement and each individual. So and they would still potentially have the risk then as well. So they could potentially still have the risk of that additional tax cost if they don't undertake those checks correctly, or HMRC look at it and actually something slightly different than what they anticipated it would be at the outset. So as a result of that, then they've got a potential risk to a significant tax cost and also a huge admin headache in order to manage that position if they want to. Whilst they could, they've largely taken a blanket approach to saying, actually, no, as a result of these changes, we don't want to be taking on locums through an intermediary, through their own limited company, because the risks to us and the time and hassle it takes to get through that process is just going to be too great. So they've then largely said they want to have either the locums being paid as an employee through PAYE, and that would probably be on a 0 hours contract, or you take the alternative route and invoice them through a limited company, because that meets all of the IR35 requirements and takes the risk off them. It is all a case of managing risk for those groups to make sure they're not going to fall foul of having a significant tax cost down the line. And the reason HMRC have reversed this risk profile is that it's much easier for them to check one large business than it is to check probably what would be hundreds of individual smaller businesses for the people that are contracting with them. So they can make one sort of overall check as to how those processes are dealt with, and it makes it much more efficient for them. They'd also think that the larger companies have better systems and processes in place in order to make sure that the rules are adhered to, whereas the smaller companies may not need to. There's no changes to those smaller independent practices. So those that are sort of turning over less than 10 million, less than 50 employees, those practices haven't seen any change in how they would ideally want to employ locums and contract with them on an ongoing basis. The preference for them would still be to operate, for the locums to operate through their own limited company. So there's now a split in terms of what the preference is for how things operate, depending on whether you're working for one of the larger corporate groups or whether you're working for an independent practice, and they're going to have different needs. There's quite a big impact in terms of what this does to the actual take-home pay for an individual, depending on what route that you go down. So if the options available would that you try and argue with the corporate group to continue as you are, continue invoicing as a limited company, if that's how you've been dealt with in the past. You can do your own CEST check and provide that to them. That has been successful, but only in a few specific cases that we've come across so far. It's largely been for very specialist provision where there's something extra over and above sort of a normal locum provision that's going through. But by all means, you can try that position. I would think that if they start doing that for one sort of normal first opinion locum work, then they would then have to start backtracking on what they do for all the others, and it would be unlikely that that would happen. However, independent practices are quite happy for you to, or should be quite happy for you to carry on and invoice through your own limited company. If for various locum works, you had an annual income before any tax of about 60,000 a year, then as a starting point, if we look at that in a company scenario where you would typically have a small salary and then the rest of the tax taken out as dividends, company pays corporation tax on the profits, you'd probably end up with about £46,000 in your hands, and then in total £14,000 of tax would have been paid. So you've got 77% of what you've got there. Now that is a very crude method. There's lots of ways that you can manage the overall tax liability so it's lower than that, depending on your personal circumstances, and the company gives you flexibility for offsetting more expenses than otherwise you might have done. But as a crude number, that's what you're looking at as a starting point, and that's the base point for a lot of locums that have been operating, because there's been that requirement to go through a limited company previously. The option that is now being presented is actually you have that same income, but it's paid through PAYE or salary. That would generally be on some sort of 0 hours contract, and there can be some employment concerns and potentially benefits alongside that as well. We've had cases going through recently with the likes of Uber where you've actually had the same employment law position being used in the reverse way. So they're trying to get all of the benefits that attach with being an employee because they want to have sick pay, holiday, minimum wage, that side of things. It's the same arguments, but in reverse from what we're looking at for the locum work here. So you do need to make sure that you're comfortable with any contract terms and conditions are in there. And that's something that if you're not, you can speak to the likes of employment lawyers and advice bureaus to see whether there's anything that can be done on those. In terms of the impact on the actual take-home pay, if you got paid £60,000 as a salary, then you would have probably around about £44,000 of cash in your hands, and then £16,000 of tax. So it's a couple of £1,000s lower than the company, but you lose the flexibility in terms of offsetting a lot of expenses. You can still do sort of professional subscriptions as long as they're on HMRC's list, but there's a much more severe restriction in terms of offsetting of any costs in order to manage that tax liability, whereas within the company there's probably more flexibility. What I would say though is that's on the basis that you're working with one employer throughout the whole year, and each employment has its own national insurance threshold. So the tax liability is a combination of tax and employee national insurance. The employee national insurance is calculated each month and it's based per employer. So if you go around and do sort of 4 weeks at one practice, you're going to end up paying national insurance on anything over and above about just under £800 a month. If you go around and actually do £800 worth of work for 4 different practices, you wouldn't have any national insurance cost. So that, depending on exactly how your arrangements are, that can fluctuate to make sure that the national insurance is there, but it is per employer rather than per the individual. So that does have a reduction in the net income compared to how most people have operated in the past, and it is less flexible for offsetting costs, but it's not necessarily as much of a reduction in income as some people potentially have feared. The umbrella company, which is the other option, that does have a very significant reduction in the level of cash that someone would get in their hands. So the reason being is that the £60,000 a year in this example is paid into the umbrella company. That's their total starting point. And from that, they then deduct the tax and national insurance that is as an employee again, but they also deduct the employer national insurance that they would pay for putting you through their umbrella company. So you're paying that element, whereas if you're being paid on a 0 hours contract and through PAYE, that is a cost that the practice that's engaging with you is paying. rather than something that you're suffering. And they're taking that as effectively an additional cost of locum engagement at the moment. And they're thinking that's cheaper than the potential risk of us having that uplift in tax and national insurance if we get the position wrong and dealing with all the admin of undertaking the checks for each individual. The umbrella company will also charge a fee for their services, and it varies depending on which ones you go for. It can be 2%, 3%, somewhere around there typically. By the time you've factored all that in, you end up with in your hands from the same 60,000 is probably only about £36,000 of income compared to 46,000 in the company scenario at the moment. So there's potentially a £10,000 reduction in net income. To get back to the same position where you are at the moment through a limited company, by the time you've put in the extra tax and national insurance, because it escalates the more you put through there, you're getting close to doubling the level of your day rate that you'd need to charge in order to end up with the same level of income in your hands. So it just isn't feasible to put that sort of level of increase in there. And for that reason, we don't tend to see a lot of people using the umbrella company unless they just want a completely stress-free life. They don't have to do anything. It goes into the umbrella company, they get their cash in their hands, they're happy with it. It's going to pay a lot of tax and it's going to cost them a fee to do it, but it isn't going to mean any headaches or hassle at the end of the year. With the PAYE option, which doesn't have quite so much of a reduction in the income, you're going to end up with lots of different P60s, employment pay slips, different things like that are coming through at the end of the year that all need to be combined with HMRC in order to get to the right tax position. I've worked out their rough numbers on over the course of the year, but it's impacted by where your tax code is and how that's implemented. And you're probably going to end up on emergency tax codes for some engagements that mean you pay more tax than you otherwise would do to start with. And that all needs to come together at the end of the year so that you either pay an additional amount or get a refund from HMRC throughout once all of that's added up. But you need to know roughly where you are in that process so that you don't think, oh yeah, I can spend everything that comes into my account and then end up with an additional tax bill at the end of the year, because the tax codes that have been used on the various different employments have meant that you haven't had enough deducted through that period. It could go the other way in that you've had too much tax deducted and you don't have as much cash in your hands immediately as you thought you would do, and that won't come out into the wash necessarily until the end of the tax year. And HMRC have processed all of their P60s and payroll datas, which is probably around about June time. So if you're doing something now and you've got the wrong tax deducted from there, you could be waiting another 12 months before everything actually comes out in the wash with HMRC, and it could even be longer than that. So knowing how much you've earned and keeping a track of it is still fundamental in that element to make sure that you're relatively comfortable with how much tax and national insurance is being deducted, and you can challenge it with HMRC at the end of the year if needs be. Whilst it should be automatic, it's not quite as automatic as it could be sometimes. What all of that has come to is we've got a lot of locums that are having a hybrid arrangement. So because the independent practices would largely want locums to carry on invoicing through the limited companies for their risk profile, if you're doing work for both the larger corporate groups and independents practices where the new rules won't apply, then actually you end up with a combination of income going into a limited company and also some income being paid through PAYE and salary. And then you need to combine the two to work out your overall tax position and work out how best that can be managed. It does mean that you're not necessarily getting the full benefit from a tax planning perspective of the limited company, but you've still got the flexibility there of offsetting some more costs that you wouldn't do against a full PAYE position. On the other hand, we've got others that have said, we've been working through a limited company previously. I know I'm going to do all of my locum work for corporate groups. They want me to be paid through PAYE. So I'm just going to wind up the company now because there's not going to be a benefit to keeping that running for the foreseeable future. And that's triggered a lot of changes from that perspective. So yeah, we've got those sort of hybrid arrangements at the moment have the best of both worlds. It doesn't make it easy necessarily to manage, and it is more of a headache for locums in understanding exactly how to approach each engagement and making sure they're on the right side of it. But hopefully that gives a bit of a background as to why those changes are in place and how they're being interpreted and impacting the overall profession. I can see there's lots of various questions coming through, so I'm more than happy to answer some of those if Arlo's got some collected together.
I think my first question was what CEST was, and the second one I think is identical to Justina's. I think we're the same. We've both been working for corporates on contracts, but also work for smaller businesses as a sole trader invoicing directly, not under an umbrella company or a limited company.
Yeah.
Are we still allowed to do that?
Yeah, absolutely. So those smaller companies, if they're happy to do that, the risk is on them rather than you as an individual, where you're just invoicing in your own name. So that's a choice they can make. As long as they're happy you're actually a locum and doing everything that they're not going to be punished for it further down the line, then that's not a problem for you to carry on invoicing in that way. It's just most practices would have previously wanted invoicing through a limited company. That was just what we tended to see, just because it removed even an element of risk, even if it wasn't there. CEST is the check of employment status for tax. So it's a tool that is on HMRC's website. If you Google HMRC CEST, it will come up with a link to it. It's a questionnaire that you can go through and asks how you're doing the work, how you get paid, what you do, and you fill in those questions and it gives you an answer as to actually, are you an employee or just actually someone in your own business? But you have to provide the right information to those questions. Otherwise, whilst they stand by the decision, if you put in the wrong information, then obviously they're not going to back that up at all. But it's a good starting point, at least, as to what needs to be in place for it.
If we're working directly with the practice as a sole trader, what amount of time would be risky to be called employee or sole trader? You know, if you work in the practice for 2 months, is it still suitable to be a contractor?
Again, the risk is on them rather than you, and it depends on the individual circumstances. The longer it goes on, the higher the risk is largely what it is. So if you start getting to 2, 3, 4 months of continuous regular work, then that starts to look, actually you've been an employee for that period of time rather than working in a locum potentially, and that's where the risk on the practice that's engaging you is there to say, if HMRC look at their accounts, they would think that they potentially haven't deducted the tax and national insurance they should have done on the payments made to you. They can't then come back to you to ask for anything extra if you're the locum in that scenario and invoicing in your own name. That's where, if you were through your own limited company, that's where the risk would sit on you rather than the practice, though. So that's the difference between the two.
But if HMRC ever asks the practice, can you show if you've done your self-assessment on HMRC and paid your tax, can you provide that as a proof that you're actually doing, you know, your own self-assessment?
Yeah, that's fine. That won't stop them looking at the practice position, though. So they won't necessarily offset what you've paid as a self-assessment position. They will just say, if you were paid X amount, that is the after tax and national insurance amount that they should have paid you, and they will start grossing it back up and ask the practice to pay the tax and national insurance that they should have received. They kind of ignore what you've done personally on your self-assessment tax return in that calculation. It is just looking at the practice position.
So if the practice is happy, then it's fine, yeah?
Yes, yeah.
Can I throw in a question, Simon, which is, if you were to pull a number out at which, if you personally were working as a locum, at what point between 2 and 4 months would you be personally getting windy about it?
I wouldn't really want to go, if I'm being a cautious accountant, which I always am, then you probably wouldn't want to go much more than 2 months. Realistically, I think you can justify that for a prolonged period of holiday cover. side of things. If it's multiple different members of staff off, or if it's sickness, that side of things, you start going longer than that, and I said the risk starts increasing exponentially the longer things go on.
Can I just follow on from that question? If you're somewhere for more than 2 months, but doing odd random days of cover, sometimes holiday cover, sometimes they're short, because that's mainly how I'm working. I'm doing odd days, but I can be at one practice for many months, but only there like a few days of those, or sometimes I might do a few weeks, but in total I've been there a lot longer, but also at maybe like 10 other practices. Is that still risky? So
it's when I'm saying that, it's a couple of months of continuous work at the same practice on a regular pattern. So if you're going in, I know it's not 9 to 5 Monday to Friday, because that's not how vets work, it never will be, but if you're doing that sort of pattern and you're on a regular shift, that's the sort of thing that says actually you should be an employee. If you're going in for odd days and they say, oh, Sophie, can you turn up today or tomorrow, we really need you, actually we've got a couple of weekend shifts or an extra something, and it's sporadic, and you're at the decision then as to, do I accept that work, do I want to do it? That's fine. And then the fact that you're then going off and doing work with other practices as well, you've got the ability to do that and in control of it. It's the regular shift patterns continuing for a prolonged period of time that it enhances the risk.
One of the corporates has said that I can carry on working as a sole trader, on, I think, presumably on that sort of basis, and the CEST has come out with, but they've sent me like a really lengthy terms of engagement with like loads of square brackets that haven't been filled in, and bits that I've asked them to change, which they've changed, but it's still a lot of like empty bits that need filling in, and I don't know whether they're just stalling, whether it's like it's so generic, it's nothing to do, it could be for like a painter and decorator, the contract, it's not specific to locum stuff. I was starting to get paranoid that it was maybe like I shouldn't be signing it because it's something odd going on.
If you're not sure, then don't sign it, I think is the end message, and get some advice on it to look through it before you do anything. It would probably be, from the experience we've seen, unusual to have one of the corporate groups accepting it. So they hopefully have done their checks and everything in behind, that they're comfortable with those sort of arrangements. But definitely any sort of contract like that, you want to make sure that you're comfortable with it and it's all completed before you actually sign up to anything. Yeah,
loads of gaps in it. Thank you.
Can I ask a question from a nursing point of view? Because a lot of this is quite kind of vet locum based at the moment, but from a nurse point of view, from what you've said, I kind of feel like we're always going to be under the direction of somebody within that practice. So does that automatically make us fall under having to go as an employee, or?
It's definitely harder in terms of justifying being engaged on your own account. It's a lot harder because, as you said, you're under the direction of the vets at the practice on helping out, and it's much more difficult. I think it will come down again to the specifics of the case and how you work. If you're on a regular pattern and regular shifts, that's more employee related. If it's you're at the beck and call when you can decide whether you want the work or not, that's more something that starts backing up the case that actually you can carry on working as a locum on that basis. But it is trickier, and you need to go through and look at exactly how you work and how you can decide that, whether there is any financial risk, whether you can send a substitute. All of those things start coming into play and are a lot more important.
Because I only do maybe 20 or 30 shifts a year working around family stuff. So I'm starting to feel like it's a bit pointless locuming because there's too much admin behind it. It's become it, but I don't know if I can still remain as a sole trader and still, because I won't do a full week's work anywhere, and I hardly ever work at the same practice 2 weeks running. It would be like hopping in and out of places at different times. So,
and again, the same applies for nurses as it does for vets. If you're invoicing as a sole trader, the risk is on the practice rather than on you. So as long as they're happy to engage you in that way, then you haven't got anything in terms of HMRC coming back to you. but they might be the ones that, depending on what sort of practices they are and what criteria applies to them, they may be saying, actually, no, we need to put you on the payroll and pay you through PAYE. If you're only doing 20 or 30 shifts a year, then it depends on what number that adds up to, but you're probably not going to be looking at it being too dissimilar in terms of income position compared to the sole trader, with possibly less headaches because you don't have to do a tax return. So there'd be swings and roundabouts on that one for you. But yeah, if you're in, again, the same position applies, sole trader, then the risk is on the practice that's engaging you.
My first one was, I guess, sort of one of my key sticking points of disagreement has been sort of financial risk, because it feels like sort of the CEST tool the whole tool isn't necessarily set up for our industry. It's set up more for building type thing, where obviously you have costs you have to buy going into a job, like, I don't know, equipment, sort of wood, whatever, whereas we don't have those costs. Our costs are more sort of ethereal. Their VDS cover, their RCVS cover, they're all our CPD and all of these, which over the course of a year obviously all mount up, and as an individual business are sort of divvied up and split in our day rates, yet the corporates are arguing that these don't count as financial risk. It just doesn't seem to feel, it doesn't feel right.
I think, the financial risk is more a case of, do you have the risk of loss of your earnings or your income or your time as a result of the work that you're doing? So if you do something wrong, have you got to go back and fix it in your own time without charging an additional rate, or is the person that's engaging or the company that's engaging you going to fix that without any recompense to you? That would be the financial risk to a certain extent in terms of the work that you're doing. Because you're absolutely right, you don't have the material costs up front. You don't go and provide your own drugs and consumables, because those are all going to be at the practice. So it is, the CEST tool is inevitably a little bit HMRC biased in terms of the questions that are asked, because they want people to be an employee, because that gives them a better tax position. Everything's in a system that they can track. So it is a starting point rather than necessarily being the definitive position, because there is always going to be things outside of those questions. Whilst they try to make it as inclusive as possible, trying to get every single permutation,
but there
doesn't work.
But there is obviously there's the question about financial risk, but then there are the questions about sort of costs associated with the job kind of thing, aren't there, sort of thing? Yeah. And that's where surely sort of that sort of stuff, I mean, surely that's what defines us as an independent business kind of thing, that we have all of those costs. I mean, I can't show up to a shift if I don't have VDS cover and I haven't paid my RCVS fees. It's not allowed. I can't work. I'm not a vet kind of thing. If those things are not in place, I cannot show up. So therefore a proportion of the same with my CPD. If I don't meet my CPD requirements, I don't get my RCVS sort of registration. All of those things are so closely intertwined. So they are a direct cost to me, to my business as an individual, that surely that also apply to every single job I take, because I can't show up to work without them. No,
and they'd be claimed, some of those expenses, in a different way in terms of against employment income, because it's something to maintain your professional qualifications rather than which you need to do the job, but it's not necessarily indicative to say you are in business on your own account if everything else is pointing to the fact that you'd be an employee. Those things in isolation wouldn't be enough.
So pretty much I'm one of the clinical directors of one of the major corporate business in the country. And I do feel sympathy for locums that they have independent companies, because I have been one 10 years ago. I run my own independent locum company, and I used to invoice myself and everything. But the reason we are scared ourselves, because even though we're part of a corporate, the financials and the economics of our individual practices is down to us. So if we have to pay anything extra, then we have to come up with to our bosses to say, look, we made the wrong decision. So we are actually, in a way, supportive of not the blanket, I don't want to call it a blanket but I prefer that the company that I'm under make those decisions, whether you independent locum are inside or outside of I-35, because we worry whether if we made the wrong decision there, we will be liable in our practice, in our financial, which eventually will probably impact in even having a pay rise for our own staff next year. So that's why we are worried about. It's not that we don't want. We need vets. I mean, I if anyone want to know, go to the Arlo's website looking for jobs. I'm looking for a vet, and I'm looking for locums as well, pretty much all the time. But we don't want to enter that risk, and we rather the corporate make the rules and then allow us or not to contract that locum, you see.
Yeah, I think it's the risk element of that, which is the key thing in terms of if you go through and check everything would be significant.
And I think everybody here understands that. And I don't think anyone misunderstands why the decision has been made. I thought the point of tonight was to discuss and try and clarify why there are often, because I think part of the problem has been there's often been disparity in how we would answer questions on the CEST tool versus how the corporates, whichever corporate it is. And sort of certainly my reason for joining was to sort of get clarification on, am I being incorrect in how I'm judging and assessing things when I complete a CEST tool kind of thing. I mean, I'm very confident that the way I personally work with the corporates I do is very much outside of either. I do ad hoc stuff, mainly sort of often with 2 hours notice. So there's no sort of thing, but that doesn't necessarily mean they're not going to sort of blanket affect me. So I'm trying to sort of use this as a sort of way of, am I filling in the tool wrong? Do I just sort of, like you were saying earlier, give in and sort of accept that I work a sort of multi-different model kind of thing, and that side of things. It's trying to finalize why the differences between what the corporates sort of advisors are advising them when they fill in the CEST tool versus how we're filling things in. And I think that's the biggest sticking point.
I think one of the problems is that it's very new, and I'm guessing with time those rules will be relaxed as corporates find that very many locum companies are not being fined. We're not being fined because of them, you know. No, so I think
absolutely. But my point was that I thought the point of tonight's meeting was to get clarification, to try and help to understand why those differences are occurring, and maybe assess that we are being mistaken, maybe sort of we are being mistaken in how we look at financial risk, which is hence my question kind of thing. Nobody's disputing the risk of to the corporates kind of thing in that sense. That's not the point of tonight.
Fair enough.
I think the main thing is the whole point is are we inside or outside IR35 according to HMRC, not the corporates, not ourselves. It's according to HMRC, which is where the buck stops. How can we get a ruling from HMRC that our working practices are truly within or without IR35? You know, I'm sat here in a bedsit in Llangollen doing a week's locum work. Next week I am Stourport. The following week I'm Penzance. So I'm around and about. I need my car to travel. I can't do locum jobs without having a car. So that's a financial risk. Yes, we've got the CPD, the VDS, all those sorts of things that we need to have, our uniforms, all that sort of stuff. So we do have to, dosimeters, there are things that we have to pay for that if we were true employees, we wouldn't have to pay for. Employees don't pay VDS, they don't pay Royal College fees, they don't do health and safety. You know, we don't have any benefits of employees, anything like that. So how can we as a body of professional people, professional locum vets, and we are the ones that are not doing set days for people or, 10 months maternity or whatever else. We're the proper jobbing locums who are, a day here, a week there, a weekend there, a night there, that sort of thing. Proper true locums. How can we find out and get a ruling on this? And then if we could get a ruling, pretty much everything else is moot.
I don't think you can, because the same way you can choose not to work for a company, then these large corporates, being bigger, they can choose not to offer you work. And unfortunately, that's the reality of it. It's not that I agree with that.
I'm not talking about locum. I don't need to work for corporates. I've got plenty of independent work. So, I'm not talking anything about corporates. I understand entirely why corporates have taken the stance that they have, that their risk is enormous. But if we could prove that our working practices were inside or outside IR35, then there wouldn't be all this uncertainty.
Simon, can I ask a question, which is it ever possible to go to HMRC, for you, for example, as an accountant, to go to HMRC and say, look, I represent a body of people, and, because the problem is, it sounds to me, Melanie, like, it'd be a no-brainer that you're a locum. I mean, I'm not an accountant, and, I have no idea what I'm talking about, but from the situation you're describing, you're going to different places. If I was in your shoes, I would have, not a second thought that I was working as a,
I mean, how on earth
as outside IR35. But sorry, I was just going to say, but is it possible for Simon or somebody like Simon to go to HMRC and say, okay, well, if we take I basically get a set of guidelines or rules that the HMRC say, okay, look, if you are not working more than a week or more than 2 weeks or more than 3, it may be that you can work longer than that, but you are absolutely outside if you are fulfilling these criteria.
Yeah, so I mean, surely, what are doctors, dentists, and other health professionals doing? We don't seem to have any input from, what's happening in the allied health professions.
So in response to that point with the doctors and dentists and that side of things, the changes that are coming into place now for private sector and impacting the veterinary practices, that was what was put in place for the public sector, including the NHS in 2017. And that resulted in a lot of those people then being paid on the payroll. The fact that that was successful for HMRC is then, well, they've rolled it out more widely to the private sector businesses as well. In terms of getting an overall ruling, HMRC won't provide a blanket ruling for an industry because the exact specifics as to how each individual is engaging with each practice and each time they do it could be slightly different, and that has a slightly different result. They won't say because of X, Y, and Z, we're going to have a ruling. This is all quite new in terms of how this is going to pan out. There will be undoubtedly some cases at some point, and it's only when you've got the evidence of those tax cases that you start to get a precedent as to how things can be operated. But HMRC won't provide a blanket ruling to say, yeah, vet locums are fine. We know they're outside of IR35, especially not right now at this stage, because
I wasn't thinking that they would say something blanket like vet locums are outside IR35, but that they might go as far as saying, look, if you are not working continuously at the same practice for more than X, and you are paying X expenses, and you are sort of 3 or 4 things, then we are very unlikely to, all things being equal, you should be outside IR35.
Yeah, so their argument will be that you have to go and put that onto their tool. That gives you the answer with all of the whole raft of questions that they've got, and they will stand by that as long as the answers that you've given are correct. They won't give an overall ruling. It is still reliant on that practice that wants to engage with the locum to be accepting as to how they're going to invoice, charge for their work, whether they want to pay them through PAYE as well. Because if actually you've got it and say, I'd like to invoice you through a limited company or in my own name, and the practice says, no, we want to pay you through PAYE, regardless of who that is. That's, if you want the work, that's how they want to do it. rather than anything else. So that's, I don't think they would come and provide that sort of ruling regardless of how specific it's made, because they'd always refer it back to the tools that are already there. And I'm sure those tools will be updated as well as this progresses, but that's what they're relying on at the moment.
That's the issue, is that the CEST tool is so non-specific, and it just doesn't really apply to our profession as the way that we work. It really applies more to the construction industry. So, you know, the answers, what answers are correct that we should be giving, that's the thing, is because you can take each question in many different ways. There, you know, there's no sort of, it's black and white, whereas in actual fact, we work in shades of grey.
Yeah, and most people will do. It's very difficult because they're trying to put those shades of grey into black and white questions, because that's what they need to feed into their questionnaire and say this is the score, or however they work it out at the end of it to get a result. And that's why a lot of them come back as uncertain, unsure as to exactly what it is. And then you need to take the advice on your specific circumstances, and then you need to balance it up yourself and say, if I'm the one at risk, am I happy with that risk? Am I happy that actually I'm confident that what I'm doing is okay after I've had some advice on the specific circumstances? And if you are, you can carry on. If it's the practice that's engaging you that's at risk, it's their decision to make that call as to actually, are we happy to take that risk? We're quite confident. Yeah, they look like a locum, everything's working like they would be a normal locum rather than an employee, so we're happy to take that risk. But there's always that element of risk in there, and different people and different businesses will have a different approach to that depending on your individual circumstances, mentality as to how you'd approach those sort of things.
How can we say that we are different than an employee working for, you know, this is what I've always struggled with, is that we are a locum tenens, we are a replacement for a person in practice, whether they're sick, on maternity, whether they're recruiting, something like that. So we are doing the job of a vet in practice. However, we get none of the benefits. And it is also quite a specialized thing being a locum, because you have to be able to, from hour one, day one, power through stuff. You know, you don't have 3 or 4 days to acclimatize and get used to things and learn the computer system. You've got to be up and running from the minute you get there. So it is a sort of a specialized sort of skill set, if you like. But at the end of the day, we are still doing the same work as another person in that practice that we're working for. That's the disparity that I'm worried about.
If you take it to sort of the extreme examples, because as to how it could be, if they're asking you to come and do that work, and yes, it's replacing an employee, but you don't have to accept it. You can say, no, I don't want to do that work. That's fine. That if you're an employee and they asked you to come and do some work and it was part of your contract, you wouldn't have a choice. You'd have to go in and do it.
Okay.
Also, if you're an employee and you've got a salary that's being paid every month, if nobody comes to the practice and there's no work to do, they still have to pay you at the end of the day, because they've got an obligation to provide you with work. So it's that obligation as to actually, can you turn it down? Can you decide what hours you work? Or do you have to turn up at a set day, set time constantly, because that's what's in place with your employment terms? That is those sort of finer details that then start coming into play as to exactly how does that look.
Can you have a combination in one job, working for one practice, a combination of employed and locuming? Because I started off as a locum covering 1 day a week, and I've been working at the same practice for several years now, and I can turn down work and I can say I want 3 weeks holiday or whatever, and it's my freedom. But in actual fact, over time, it's kind of fallen into a regular 1 day a week plus whatever holiday cover they want. So I might just do, a couple of days 1 week, or, an extra day another week. So would that be considered as I should be paid as an employee for the 1 day a week that I'm working regularly, and then the rest of it would come in as a self-employed sole trader. Can you do that?
I think you'd struggle to argue if you were being paid as an employee from a practice to then say that actually no part of that work is then on a locum sole trader type basis. If you are working as a sole trader, again, the risk is with the practice rather than you as an individual. But if you've got that regular pattern of work to start with, that's something that starts edging towards being an employee rather than a true locum, even if it's then interspersed with some other work that you can pick up and put down as you want to. Trying to argue the case gets a lot harder when you've got an employment relationship already with the business, because they'd just be looking at it as paying sort of overtime or additional hours, something like that.
Okay. We did try talking to HMRC and going through it all, and I went through with a specialist, and they took over 45 minutes to an hour to go through all the questions, and they didn't seem to know what the final answer was. In the end, they said they thought I was probably okay, but it would depend on what happened if it was investigated, and that was the highest level that I could talk to somebody.
At least you managed to talk to somebody. I didn't.
Yeah.
Some of my questions, kind of one but broke into a few, is you mentioned about umbrella versus your 0 hour bank contracts, and sort of the pros kind of highlighted the 0 hour. Cons weren't really highlighted. I'm worried more about using those for future credit, so mortgage and that, because I seem to see that that can be a downside in how much sort of accountancy that you need as a backup, statements, pay slips, that sort of thing, before you can apply for mortgage. So I know that might be out of your remit, but I think that's one thing that probably needs to be highlighted. There are some negatives to having a 0 hour contract, not just the terms that might be given to you, but also what you may want to get moving forward. Now, is that the case, or is that kind of something I've been advised incorrectly?
No, there would be, but then the same is probably true of sort of locum work generally, and because you've got no set employment contract to provide to a mortgage.
But you wouldn't have that with limited, though. You would need at least 6 months statements and that before you can apply.
Yeah, so you're going to end up with the same, you've got the same fluctuation in income throughout the period of time, that they'd be looking at basically having a couple of years worth of solid income to back it up, so that you can demonstrate that those fluctuations, you get to a consistent level overall.
I think that's the thing that's key missing with zero, is it's kind of getting plugged quite a lot. I see in many different fields, kind of away from umbrella. I understand why there's a lot of negatives of umbrella, but there's a lot of positives, which doesn't seem to get highlighted either. In the view of, I think you need up to 3 years bank statements as well as pay slips and that, with a lot of these 0 hours and that, if you want to apply for high credit. But with limited and umbrella, you need a lot less, sometimes even up to 3 months. So I think that's something to bear in mind with everyone sort of pushing towards zero. That's something that, if you're needing that moving forward, that might be something to look into before you decide if 0 hours, what you want. Second question to that was umbrella versus limited as a hybrid. Now, you mentioned the other hybrid there of using limited versus 0 hour. I know, again, umbrella seems to be, and I'm just trying it out now, and I've gone through the first month, and by large, it seems to have worked out okay. But there are some negatives, which I've seemed to find out, is that it seems to be that you have a higher personal tax with your limited, which means you have to keep something set aside for the dividend that you have that you may want to then pull out. Now, is there any other way of kind of offsetting that? I know increasing your umbrella day rate, you can try and offset it. But the problem is, I seem to see, and naive, I'm not an accountant, is by increasing umbrella rates, you're getting penalized then by your limited side, because you're in the amount of personal tax you're allowed to take, also the amount that you're then earning potentially over the year.
So the umbrella company pays out everything that comes into you. Effectively, you earn goes into the umbrella company. They take up all the tax and their fees, and then they pay you everything as a salary. So compared to what may have been in place for a limited company previously, you had control over how that income was distributed to you and could manage your personal tax situation. If it's all coming out as a salary payment, you lose that control. It's just taxed in at the point it comes out. So then when you are then taking further funds from limited company, if you've still got one alongside it, then yes, you've lost that initial tax allowance, so your personal allowance and the lower tax rates potentially. And it's balancing the two as to getting that sort of hybrid arrangement. It would be, if you're doing a hybrid, it is sort of probably a limited company and then going with either a PAYE or a umbrella company alongside it in order to meet the requirements of the practices that are only taking on those sort of engagements. But you've still got the limited company there for a bit of flexibility to manage your income position and sort of tax efficiency as much as you can for any work that you can still invoice through your company.
But wouldn't using a limited, using an umbrella or a 0 hours, using a hybrid, wouldn't that weaken your position as being a limited company working outside IR35? Because you're accepting the same work, but accepting you're an employee.
No, but you'll be using your limited through independents rather than corporates.
I think because it relates to a specific engagement, your status, it wouldn't matter.
Yeah.
One position wouldn't influence another because it would be a separate engagement.
Yeah, they'd look at each engagement individually. You've got someone who only wants to engage with you in that manner. That doesn't then detract from the fact that you can still invoice things in a different way.
So formerly, at the present moment, I have an employment in act, but with a corporate. But I used to work as a locum until short time ago, and we were 2 people in one company, me and my wife, which would alternate on a internal rota that we would establish, on which the practice has no voice, and we assume that this way we would be by any means outside of the IR35. Am I correct in saying that?
It depends on the specifics in terms of how you're engaging with them, because even if there's 3 of you invoicing through a common entity, if you're still working regular patterns across the 3 of you, it could still be caught. But if it's not quite as prescript as that, then it might not be. It's very difficult to give a specific answer to that without knowing the full facts of it. It would still.
We would substitute each other occasionally without even a fixed term.
Again,
so the other one would be off as a backup for the other person, always available. Does it make a difference?
It can do. I can't give a definitive answer on that one here without knowing the ins and outs as to exactly how it would operate, what it looks like on a day-to-day basis, because it could still be caught by the rules even if there's multiple people there. It's actually how that company is working with it, and it would still require the practice that's engaging your services to start with to be accepting of that if the risk is on them.
Going back to what Melanie was talking about, where there's this disparity in how to approach answering the questions on the CEST or any other tools to assess status. And I actually did go through a CEST with HMRC bit by bit, like someone else said, and it took a really long time, and we got to the end of it, and they had argued that if you left out substitution out of your agreement or contract, so you couldn't confirm that aspect, all the mutuality of obligation was fine and outside, everything else was outside, but you weren't able to answer or indicate financial risk adequately because of what they consider to be financial risk in their CEST tool. The most common result you will get when you put all of that through is unable to make a determination. So, and that's exactly what I got with HMRC on the phone as well. And it's then what what do you do with that? What other criteria can you then look at so that you can get a reliable answer one way or the other, that would stand up to scrutiny if it was looked at in more detail? And I just really struggle with applying those criteria of the CEST to a locum position, because at the end of the day, it never even approaches that whole regularity, duration aspect at all.
In the same vein as that question, Simon, can I throw in, you know, to what degree do you think that if it came to, you know, the HMRC investigating an individual, you know, if you've, I mean, I think surely most of us, surely most of us know when we're sailing a bit close to the wind, you know, in terms of whether, you know, we're actually working, you know, we should really be an employee or we shouldn't. And, you know, if you're comfortably, if you're going from one practice to another, you've got your own expenses, you're not, you know, you are, it is at your behest as to whether you're taking the job or not. I would have thought it's pretty obvious that, you know, you can honestly and reasonably argue, and it would be very hard for HMRC to argue otherwise, that you are outside it. I mean, so, you know, how much, Simon, you know, are people over worrying, really, is my question.
Yeah, the CEST tool is used as a starting point. It's not the be all and end all of everything. If you get something and the information puts in and says, I'm absolutely an employee, then they will take that and you'll be pretty bang to rights on something. But there are a lot of scenarios where it comes up with that uncertain response. And it's if it looks like an elephant, it probably is an elephant. That if everything looks like you're a locum and working on your own account, you probably are, but you're not going to necessarily get that cast iron certainty from that CEST tool to be able to provide you with that. The only way you're going to actually get a cast iron response is if HMRC look at it and challenge it, and you just have to make sure that you've got the evidence there to back up, and where it is those sort of things for financial risk and the obligation in terms of how you can turn down work, actually make sure you keep track of emails and correspondence to say that you've gone round and worked at different practices, you've turned down work because you didn't want to do it that week, or it wasn't the right rate of pay. All of those things start to back up your case. And yeah, if it comes down to how individual approach that risk. A lot of people, because the risk would have been there in the past as well, this has just been brought it to the fore a little bit because it's become a bit more well known with the changes that are going through, but the risk was probably always there and people were carrying on and were quite happy with that. If you want a completely risk-free approach, it's very difficult to do that with the locum arrangements. If you've got a small element of risk and you're comfortable that the arrangements are there, and that actually, yes, everything I'm doing is on a locum basis, then that should be fine. But you just need to make sure you keep the documents just in case HMRC do challenge it. And the risk is with the practice anyway. Yeah, depending on how you're engaging and who with, the risk would be with the practice. So it's up to them to keep those sort of arrangements as to actually documents as to exactly how they engage with you in the first instance. It depending on if you're if the work is through sort of with independent or corporate practice, whether you're invoicing as a sole trader or a company, it moves the risk profile around. But whether you're the engaging practice taking on the locum, or whether you're the locum and invoicing them, there is an element of risk in those arrangements, because unless the only cast iron thing is to be paid through PAYE and have all your tax and national insurance done, but that's not what people want to achieve. I'm just wondering whether it would be useful to produce a checklist of criteria under which, you know, the sorts of things you were talking about, Simon, where, you know, which locums should just keep a record of, so that if you are challenged, you've covered your back. Yeah, it would be the sort of normal records that you'd want for running your locum work, if I'm honest, is your diary as to where you've done work previously, and so that HMRC will look back and check that. Definitely if you've got email correspondence or messages in any form that show that you've turned down work that's been offered to you previously, that would be a big help, because that starts showing that you've got some of that, the choice as to when you work and how you work is on you. I think the other side of things in terms of the financial risk, if there are any issues, how do you then correct that? Do you go in and help provide something extra to the practice, go and correct it for the client? How does that get dealt with? And also making sure that you've got a contract in place that has got everything documented, rather than it just being on a handshake. So that if HMRC do inquire into these things, that's what they will be looking at to start with, is what contracts are in place, where's your diary, where you earned and where have you worked to do it. That will be their starting point for any sort of review of the situation. I must say we have seen very, very few reviews of the IR35 position up until now. With how things have gone in the past, we have seen one or two. It's very, very few, and that's why HMRC have really changed the mechanism as to how this gets dealt with, is that they've put the risk back onto the larger businesses rather than the smaller ones, because it's easier for them to check them rather than it is to check thousands of small business owners. So there haven't been many reviews that we've come across, and the cases that are there tend to be significant flouting of the rules, where it is so obvious that they are an employee that they're doing it purely for tax avoidance, rather than because it's actually, this is how we work and what we should be doing on a normal basis.
I don't think it's disputed that a lot of locums, especially somebody such as Melanie, is definitely outside IR35, but the problem isn't so much where they are, it's the fact that a lot of businesses, the corporates, have decided to put everybody inside, and that's their decision as a business.
I just say I don't think they're putting them inside IR35. They've just decided they're going to pay them in a different way, because that's how their risk profile is.
Yeah, so they've made a decision not to take the risk of anybody being outside and decided incorrectly. So that's their decision, and obviously that's where they're sticking with at the moment. So therefore, the people who want to work with the corporates are obviously looking at what they need to do with their income to try and somehow balance it with where they were at before. And there's an awful lot of numbers being bandied around, all the way from a few percent all the way up to, you know, people doubling their requests as far as wanting to get to the same take-home pay. Now, you mentioned before that the umbrella companies are going to be significantly more expensive. I've never used one, so I don't know where that is. But certainly if you're going from a limited company through to being PAYE directly, to me, from what you said before, it sounds like it's a few percent different. It's not the 35% that some people seem to be asking for at the moment. So from where you're at, from where we're at, what should we be looking for as far as what's reasonable to try and offset the losses compared to where we were at before?
Yeah, it's still very difficult to compare one against the other, because it depends on what you were doing in your limited company to start with and how tax efficiently you extract any of the income that you had come in there, because you could do that in various different ways, and it makes it quite tax efficient, so tax costs down, and you can't replicate that in the PAYE environment, because there's a lot more structure to it that restricts what you can do. If you're just looking at, we ignore any of those sort of things and just say, I'm getting income in, and then I'm either getting it through PAYE or I'm getting it all into a limited company, paying corporation tax out, and then taking the rest out as a small salary and dividends without any sort of messing around or managing the tax position, you'd probably be looking at somewhere around about 5 to 10% increase in what you need to do to put the same net income in your hands. Now, the exact number will be different for each person depending on how much you're working, where your tax thresholds are, if you're working at multiple different practices, but it's somewhere in that region rather than it being a doubling of the rates. That's excessive in terms of trying to put it back into the same net income position, probably, unless there was something that they were doing that meant they didn't have hardly any tax to pay through their limited company previously.
Would you, it's probably controversial, would you agree that part of the reason this has all been brought in is because people were being creative with how they were paying themselves? Because obviously the limited company system wasn't designed to be paying yourself, you know, the bare minimum and then put the rest through as dividends, although it only is a few percent different. So it's kind of offsetting against, you know, where they would have expected you to be paying before.
95% of small business owners would be doing it, as far as I'm concerned, in terms of the salary and dividends, and that's not been challenged from a remuneration point of view for a limited company. It's the fact of people working through a limited company that should be employees, and I'm not saying that applies to the locum vets at all. I think there's more sort of very clear breaches as to how people have played around that system that HMRC are trying to crack down on, and locum vets and nurses are being caught in the middle of those changes and how that's impacted the industry. More than anything, I don't think it's the limited company remuneration that's triggered it. It's just trying to further enforce legislation that was always there but has been very unenforceable for HMRC.
Thank you.
Could I say a couple of things just shortly? It's Peter.
Yeah, of course.
The first thing is, okay, yes, the corporates decided the risk, they don't want to take the risk on, but what the risk that they actually do take on is that less locums will be prepared to work for them now, and then they're going to run out of vets and they're going to struggle to cover for their own people. And that will come into play soon, I'm sure. The corporate that I used to locum for, which I don't anymore, they really struggle to find vets to cover holidays and everything like that. So yes, there's a risk component both ways, and that will come into play, I'm pretty sure. The other thing I wanted to say is, historically, vets are considered professionals and mostly worked for themselves or as partners. And that has the last couple of decades, and I think that plays a big role in the way that we employees now. And now this comes forward as a problem with the IR35. I think if you go through the individual points of the IR35, yeah, we still outside. We can argue very strongly that we still outside individually. But I've got a question, and
that's a nice little film.
Totally out of the box, I think. I've got some dentistry friends that works as dentists, and they've got a completely different arrangement. So I don't know, Simon, if you know anything about that. They actually work as self-employed, and the clients are actually their clients, but they're working in a corporate environment. Do you know anything about that?
Yeah, so if they've got a client list and they choose how to manage that client list, effectively they're then renting a premises and some services, sort of like a managed surgery to start, for example, for them to then control what hours they work, what income they generate, to a certain extent what they charge for those clients, and it's their clients that they're working for. So that's how that comes around, rather than it being a case of going into a business and having all the clients that are there. If they were to move to a different location, they would probably take that group of clients with them, rather than being fixed to that sort of set practice name or building wherever it is they're doing work. So that would probably be quite, because you tend to have, in the dentistry world, you tend to have client lists and sort of clients that you would go and see X, rather than necessarily going to certain dental practice as such. It probably is the same one, but it's probably more geared towards that individual rather than the veterinary world. To do that as a locum basis, you'd have to effectively say you're going round and only seeing certain clients, rather than dealing with all clients that came in to see X practice.
Yeah, because I've seen that model just a little bit, with, especially if it's more specialized, that like people that's offering scanning services or cardiology or dermatology, that kind of services, more mid or specialized services, that they can actually do that. But it's actually interesting that that model's not really taken hold of the veterinary world, and it's actually a bit sad.
Yeah, I think it would need a certain set of a specific set of circumstances in order for that to work from a practical point of view, as well as from a tax point of view as well. It's not to say that it can't, but it needs to have quite a specific criteria in order to everyone to fit into that sort of model.
Thanks.
Can I just say something? Can you hear me?
Yeah, of course.
Hi, it's Ian from the BVLA here. really good to be part of this discussion, and thank you very much for having me. Interestingly, the point that Peter just made about the dentists, and we are currently in a situation where we could conceivably have veterinary cooperative practices set up from large numbers of locums. You could have, I recently contacted some friends who are locuming, and there has been discussions ongoing about setting up a cooperative practice where you would rent a premises and each do set days to set clients. So that certainly is something that we could do going forward. Can I ask a couple of other questions? Is that all right while I'm here? Francesco, I think you're working for IVC as far as I can see. I was wondering if you could tell me, have you heard about VetPartners' latest position on individual assessment via CEST? They have basically taken the clinical directors like yourselves' points of view on board about the fact that they can't get any staff. They have reassessed their own position on blanket assessment and decided that what they want to do is individual assessment of each locum when they book the locum, which has basically opened up them for us to go and work for them. So they are now able to assess whether somebody is inside or outside of IR35, and then they can deal with them via the limited company, which if CVS and IVC were to get on board, would conceivably change the game considerably. It would also have them observing HMRC guidelines on avoiding blanket decisions. Finally, when it comes to financial risk, I have my own ultrasound machine, which is quite a good thing from that point of view, but it's only one thing on the CEST. Now, I was wondering, when we get down to the matter of cancellations, last year when COVID hit, I had, in a matter of 2 text messages, more than £5,000 of turnover disappear from my books, from Vets or Pets cancellations. I was able to claim about £500 of furlough per month for the next 2 to 3 months. That was my income because my work was cancelled. Now, if that's not financial risk, then I don't know what is, because everybody who was employed was furloughed up to 90% of their salary. So I think that put us in a very financially risky position at that point in time. Finally, I think that people are being a little bit intimidated by Vets or Pets' approach to the CEST, because whilst they're not taking the approach of IVC or CBS, where they're refusing to engage with locums via self-employed or limited companies, they're having their financial director contact individual locums in order to badger them with individual points from their CEST and essentially issue a kind of a generalized you're inside IR35 decision. So I don't think that they've got the right approach either. But substitution is definitely a major point, and email showing that you can turn down work as well would definitely be something that could go on. So thanks very much for bringing that up. That's great. Scarrott, didn't think of that one.
Yeah, there will be an element of all of these groups finding their feet as to how they're going to apply all of these rules, and they've come up with a decision to start with. And if VetPartners start the process of saying, actually, no, we're going to review everyone on an individual basis, and that means that actually locums then don't want to go and work for IVC or CVS because they can get enough work elsewhere. Yeah. There is generally a shortage of vets at the moment. People are crying out for them at a lot of practices. That will then probably trigger a change in approach potentially, but it depends on there's a lot of decision makers in that process as to exactly how do you get to that end result. And it might well happen if there's enough pressure and enough shortage, but if people are still saying, no, okay, they can meet their requirements and we're going to work in this basis and it means our risk isn't there, then they'll probably carry on. I completely agree. The fact that you lost a huge chunk of income as a result of COVID restrictions and everything like that, it's a massive indication that you've got the financial risk there because they turned down that work. If you're an employee, they would have had to carry on paying you, even if that was on the furlough scheme. So that's
Yeah,
all of those.
I was thinking, how many vets, how many locums lost work during the pandemic? I would imagine lots, most. All. Yeah, well, all, there you go. I mean, that's a brilliant point.
But can I just
And,
make a small...
even though, oh, sorry, go.
I was just going to say a small point. Yes, all my work was cancelled, but whether for right or for the wrong, like most of my income was paid through PAYE from my limited company. So I did well because I got furloughed. Yeah. So it wasn't due to COVID, it was due to how you were paying yourself. If you were a limited company, I realise self-employed is different, but even with self-employed, obviously there was the scheme where if you could prove your income and things like that. So if you were paying yourself through PAYE from your limited company, the majority of your income rather than just enough to get under threshold, but then actually you did go through furlough.
With respect, that's not standard accounting practice, Gillian.
No, it's not.
That's an unfair reason to have a limited company that's paying itself largely through PAYE. Did you do that deliberately?
Yes.
Right.
Yes.
I wish you could do that at the start of before this pandemic hit. That would have been great, but unfortunately,
I realised that I was looking. It was a decision. I've got other things that go through the limited company as well. So yes, it was a decision to pay ourselves through the limited company. And also, I genuinely, this is going to sound really naive, I genuinely think that as an employee of my limited company, I have a tax liability, so I was happy to do that. But it did mean completely inadvertently, I did furlough myself. So it was how you paid yourself. It wasn't due to COVID per se.
Yes, but as we are limited companies, although we differ in that respect, across the board, 99.9% of limited companies will pay themselves a minimum salary. This year, I'm actually paying myself slightly more than that. And incorporating an element of employers' national insurance on the advice of my accountant, which he says is nothing to do with what we're talking about, and it's just because it's the most tax efficient way of doing it. But now I'm currently going to be paying corporation tax on company profits, national insurance contributions, employers.
But I also know people who've paid themselves a bigger proportion when they wanted to get a mortgage because they had to show more pay, regular income, things like that. So people do play with the system depending on where they're at in their part of their life.
That's not playing with the system. That is just accounting.
Yeah, as I said, you account your money differently depending on what you need to achieve from it.
Yeah, largely all limited company directors that were paying themselves from a basic salary and dividends. If the bulk of your income was dividends, you were missing out on any sort of COVID support over the past 12 months. Yeah. It was always one of the smaller gaps, but was quite a large impact in terms. It's quite a significant proportion of people, and there were a lot of people lobbying for changes on that, but it wasn't anything that came to fruition for one reason or another. I think they could have had the ability to do so, but decided not to.
I think that's what they wanted to recover that, but also the thing with that is we could use that as proof of financial risk, whether or not we got money, whether or not we, Forgotten Limited or other pressure groups are successful, doesn't really actually affect this. It just demonstrates that we had a huge financial risk going into that period.
Yeah. And I mean, the financial risk, even for those that did carry on working, was still in that, I mean, the one corporate sort of that carried on sort of employing during the sort of time was obviously Vets Now, but because they were then overwhelmed with sort of market forces, because a lot of locums came into their locum bank, they just slashed all of what they were paying. So they dropped what their sort of standard rate by sort of anywhere from 60, 100, sort of 20%. Sort of there was significant drop. And as a locum, your choice was you either accept the new rates or you turn down the work, because that's market forces. But that's still a financial risk. We took a pay cut because they just turned around, well, we've got a shed ton more locums in now, and we've got people that are willing to accept these rates. So this is your rate. Do you want it? Yes, no. And
that comes down to sort of the offer as to whether you accept that work and whether you're prepared to work for that level. You can say, no, I don't want to do it for that amount. So I'm going to carry on and just pass this time. Thank you. Yeah. That absolutely backs up the case that you're not within IR35. And it's just building that evidence bank in the background.
So therefore, sort of, because the key, so it would appear that the key thing sort of outside of CEST, especially if you get undetermined, is that mutuality of sort of obligation and where the financial risk comes, and that despite the fact that the answer to some of the CEST questions may well sort of be the general risk is minimal, i.e. your VDS cover, etc., doesn't count, the financial risk in that sense counts. And the same with even if the substitute sort of aspect. I mean, if I'm taking a job at 6 hours notice, I'm not likely to ever provide a substitute in that role because I am the substitute. So the substitute point, if you are a genuine last minute locum, almost the argument that, well, yes, it's in the contract, but you've never used it, is the argument as to why you fall inside IR35. But it's like, but I am the substitute, so I'm never going to trigger a substitute clause if I'm the substitute. Do you see what I'm saying?
Yeah, absolutely. And in those sort of situations, they've got to look at the practical impact, but that's where it comes down to having that discussion, because it won't fit nicely in a box that HMRC want you to tick. If you're booking stuff and it's actually it's pre-planned holiday cover and it's a month or so in advance, that's where you want to make sure you've got a substitution clause in there, so that if you can't make it for any reason, then someone else can still undertake that work rather than just cancelling it completely. It gives you that flexibility. Yeah, last minute you can't expect to have that in there, but you're getting into sort of the finer details of each element in each engagement that you're looking at, that HMRC haven't got the capacity to factor all of that in on their CEST tool.